My name is Sundeep. We'll take you into the world of shipping now. So my background is marine insurance. I work for AXA XL as the head of shipping for them in insurance. I've got a background of 14 years at sea. I've sailed at sea, and then I joined insurance, so I know what I'm talking about shipping. I'm also joined by Vincent, who's the head of international development with ClimateSeed, who are our partners. And today we'll be sharing with you what we've developed for the shipping industry as an excess emissions insurance. We'll start with an icebreaker question and ask you which is the most efficient mode of transportation in the world today. So we'll switch screens and we'll give you a chance to vote.
So you have a Mentimeter. So it's a website. You can just go on the website and use the codes, and then it should be interactive. So we should have your answers directly on the screen. I hope so, because we tried that yesterday night at 10 when Max called. So normally it should appear.
Do you need to put this QR code or should come? Hold on. Yeah. Okay.
Yeah, we can also go with the QR code.
Nope. I might need you, Felix. Yes.
It's live.
It's working, yeah.
Yeah, it's working.
So what we're asking you here is which is the most efficient mode of transportation, which means which transportation mode has the lowest carbon footprint for every ton of cargo transported for a kilometer in terms of efficiency. I think it stopped moving. So just to share the answers, the most efficient mode of transportation amongst these four is rail freight with the lowest carbon footprint. Second is trucking. Third is shipping. Sorry, second is shipping, and then trucking and airline. Airline is the worst in terms of carbon footprint, just to set the stage why we came up with this product. And before we end the presentation, we'll request your feedback and ask you whether something like this would be interesting for you to develop for your own business, and that's where we'll end. Next. Thanks, Felix. So this is just the result, what we shared with you. This is the grams per ton kilometer of carbon emitted by each mode of transportation. And you can see shipping is one of the most efficient. It emits 3 grams per ton kilometer of freight transported. And you can see trucking is 80, and the worst is airlines. So that shows you what your carbon footprint is for your supply chain when you're moving materials across the world. And one of the reasons why shipping is the most efficient is the economies of scale, because we are able to load much more cargoes on a ship compared to a smaller chassis of a truck. So now I'll share with you what the shipping industry is doing in terms of technology adoptions to reduce their carbon footprint. These are 13 ways of reducing a carbon footprint in the shipping industry, but I'll only show you one as an example, and that's the reason why we came up with our excess emissions product. So what I'm showing you here is actually a rig sale system. So what's happening is ships are now trying out new sails, which is like going back to the sailing days. So they are retrofitting the existing ships with sailing systems, which help them to reduce their carbon footprint or achieve fuel savings of almost 30%. And in the shipping world, fuel is a big cost of operation. It almost contributes 60% of their business costs. So if they are able to reduce their cost, they are reducing the carbon emissions as well. So it's a twofold advantage the shipping companies get. So what are we doing as an insurance company, AXA XL with ClimateSeed, to help our clients de-risk their energy transition is what we did with this product. And I'll show you how the product works by taking an example. So this is one of the biggest commodity trading companies in the world, based out of Geneva. What they did last month was they retrofitted one of the existing ships, which is a bulk carrier, with these wind sails. These wind sails only operate when the ship is at sea. So in the port, they will just go down and be like a normal equipment. But when the ship is sailing, they'll go back in full formation, and they'll be able to save almost 30% of the fuel. 30%, like I said, is a big cost advantage to a shipping company. And in terms of fuel savings, it's almost 1.5 tons of fuel a day. Now imagine what happens to this ship. So this ship did its first voyage from Shanghai into Brazil, Paranagua, which was almost a 41-day voyage. And in that 41 days, it emitted carbon emissions. But what the owner did, they actually used the sails to see whether these sails actually work. And where we come in as an insurance company is if a client like this company is not able to use these wind sails, assuming some accident happens, their carbon footprint will not be what they planned for. And that's where the product comes in. So I'll give you an example. This ship took 41 days to sail from China into Brazil. And if the wind wings would have got damaged, the ship wouldn't have been able to save that 1.5 tons of fuel oil, which would have resulted in 191 tons of excess emissions. What we do as an insurance company with ClimateSeed is we would put the client back in a carbon neutral position by offering them carbon credits. This is all done in-house. We've got a telematics platform for our own shipping portfolio. We can check the ship's trading pattern. We can see how it works. It's seamless in terms of a client experience. And that's what we'll show you as an example in the next few slides, that how can we adapt this sort of a product in other supply chains. So to give you a very high level overview of what we offer in this product is, it's a bespoke insurance coverage. It's very specific to the type of ships the client owns, very specific to the trading pattern. We can offer it to cruise vessels, we can offer it to container vessels, we can offer it to bulk carriers, very specific. The speed of claim settlement is key, because that's the bad side of people thinking about insurance. They say it's very difficult to get a claim. So the speed is so fast that, like I said, we've got a telematics platform. We can monitor our ships moving, and the payout is instantaneous. The client doesn't need to submit paperwork to claim an EEI claim. We can do it using technology. We've got great cross-sell potential. You might have seen a lot of ports are setting these green corridors for shipping, and the ports require shipping to disclose their Scope 3 emissions. So that's, again, a clientele which we are looking at. We're also looking at banks and financial institutions, because a lot of shareholders are asking banks to disclose their carbon footprint, especially for their shipping portfolio. So they are also our target clients. And like it was covered in the previous presentation, there's increasing pace of regulatory compliance. EU ETS is coming into force for shipping 1st of January 24, and this product is really good for clients who are in that space. Now I'll get some feedback from you in the working sessions. We've thought of launching this product into the trucking industry. So the question is, how much does the global trucking freight industry emit in terms of carbon dioxide? And the number is 1.8 billion metric tons. That's a huge number compared to shipping. Like I said, it's one of the most polluting modes of transport. And this is the EU stats. In 2021, the emissions from trucking was 274 million metric tons. So that's what the EU emits in terms of trucking. And that's what we thought, that this product is not only viable for the trucking and freight industry, it's also viable for the airline industry, because a lot of clients use the aviation industry as well. And like I said, it can be easily replicated across other transportations, because we've got telematics to support us. We don't have to do the old school way of tracking, filing claim documents, so it's very seamless to adopt. And what we did, like Kim mentioned in the morning about every company coming up with carbon calculators, I used one of the carbon calculators of a freight forwarding company in Germany, and I did a simulation of how would it benefit clients to reduce or to manage their excess emissions. So this is an example of a truck going from the port of Hamburg to the city of Berlin, carrying 10 metric tons of cargo. It would normally emit 0.22 tons of carbon dioxide if the truck went on a normal route around 295 kilometers. Now imagine the same truck experiences a traffic incident on the way and takes a diversion of, say, 15 kilometers. How much would that emit? The number is 0.23. It looks quite small compared to 0.22, but when you scale it up for a client who's got 100 trucks, what would it look like? So I scaled it up, taking an average mileage of 78,000 kilometers. That's a normal mileage a truck would do. This is data which we picked from the EU stats. Assuming it does 264 trips a year, 100 truck fleet, the emission number is 26.4 tons. So that gives you the scale of what the emissions issue is. And we are not talking about offsetting emissions due to accidents. We are purely talking about diversions, and traffic does get diverted. And Germany is one of the biggest road haulage markets. And this example, which we picked, especially from Hamburg to Berlin, is one of the most busiest routes for freight transportation. So this just gives you a scale of what the application could look like. And that's what we look forward in the next few hours when we have these breakout sessions from you to get feedback, whether this is something which would be applicable to your industry in specific. That's it from me. I'll pass to Vincent.
Thank you. So, hi everyone, my name is Vincent. As Sundeep said, I'm head of international development for ClimateSeed. We started the company 5 years ago, and we're positioned on all the decarbonization value chain, so helping businesses calculate their carbon footprint, scope 1, 2, 3, with reliable data from the value chain for scope 3 emission. We also help companies set SBT targets and, of course, contribute beyond their value chain to mitigate their impact. And so we collaborated with AXA on this contribution part to create the EEE product. Just a thing I want to stress on about the EEA product is called excess emission insurance. And so the word excess is very important in that case, because some excess emission are often not accounted for within the scope 1, 2, and 3 of big companies, but we still need to do something about those emissions. And so we thought that applying strategy to cover those emissions with carbon credits, reliable carbon credits, could be a way to cover those emissions and actually getting a strategy for those emissions. So I will explain how with the product we applied our know-how on the selection process of projects, the operational model beyond the product, so the presentation of several projects as well, and our claims for different sectors or use cases can actually contribute to projects to avoid or capture CO2 emissions. So we built our contribution offer on 3 different pillars. And the first pillar, which is probably the most important one, is the selection process. You probably heard a lot of things about carbon credits and the Guardian and scandals and everything. We worked for 5 years on the selection process to make sure that the projects we source and that we invest in with AXA actually are of high quality. So we have a 3-step verification process. The first step is very simple. We only work with big standards like Gold Standards, VCS, Plan Vivo, and others. And we work on the methodology directly with them to actually make sure that the methodology is additional and that the credits that we source cover carbon leakage, additionality, etc. The second step for the verification process is very important as well. We work with the compliance teams of BNP Paribas, the largest European bank, to cover any economic and reputational risk for those projects. So, for example, we are checking the financial viability of the project carriers that are often based in the south. We are also covering anti-money laundering risks for those companies. And we are checking reputation online with different tools to make sure that all the projects any client could contribute in are not actually linked to a scandal at some point. We are probably the only ones to go this far into the reputational analysis and economic analysis of the project carriers themselves. Third step, this is the most important step in our selection process. We didn't outsource the selection process. We have our own project teams within ClimateSeed, composed of 10 experts, forestry experts, for example, and we are checking carbon additionality, we're checking carbon leakage, and we are checking also all the co-benefits. Unfortunately, most of the co-benefits linked to climate contribution projects are not checked and are qualified. We are trying to quantify those impacts. So, for example, impacts on life on land, impacts on water, impacts on biodiversity, etc. And so our experts, they actually travel sometimes on site and they are checking the co-benefits of the projects as well. And we are actually trying to sell to companies not only carbon credits, but a climate contribution. And a climate contribution is not only carbon. It can also be water and other impacts, and those impacts need to be checked as well. And often within the methodology of gold standard of VCS, those impacts are only qualified, and we are trying to bring a quantification of those impacts as well. So it's been 5 years that we're working within the voluntary carbon market. And in 5 years, we sourced 40 projects. And we have a rejection rate of around 25%. We have 25 different locations. We are now investing in our own projects, like mangrove projects in Mexico. And we cover all the different typologies of projects there is on the voluntary carbon market, from household and community devices to tech-based and hybrid solution like biochar or like CCU, CCS technology. So the second pillar of our offer after the security is, of course, digital. And when it comes to this product with claims, we need a platform, intuitive platform where the operators can actually contribute directly to pre-selected projects and follow their whole strategy. So we have a platform. It's not a trading platform where you just have a pricing and actually the typology of the project. But we have everything within the platform. We have communication guidelines. For example, at ClimateSeed, we advise and advocate for companies not to use carbon neutral anymore, but more climate contribution beyond the value chain to actually reach carbon neutrality at the global scale. So you have advice on that platform. You have, of course, pictures. You have the story of the project. You have the timeline and everything. All our clients, they can follow their carbon strategy. So you have all your different contribution. In the case of the product, of course, linked to claim for the marine industry. You can download all of the reports, and you can also choose the projects not directly linked to carbon, but linked to a co-benefit, so a sustainable development goal precisely. For the EE product, we pre-selected 3 projects, actually, that are, of course, showcased on the platform. And for the different claims, you can actually contribute to 1 project or several projects, depending on the size of the claim, of course. The third pillar of our offer is transparency. Unfortunately, on the voluntary carbon market, when you actually contribute to a project to get credit, you don't know where the credit comes from. Maybe you are paying the margin of several suppliers and actually not contributing directly to the impacts of the projects. So we built something very simple, actually, to understand. we are linking directly the contributors, so companies, to project carriers. We're not working with traders, we're not working with brokers. If you contribute through ClimateSeed to a project that we sourced, of course, the project is selected by ClimateSeed and our teams, and you also know that 100% of the price are set by project carriers to actually like achieve real impact for the planet. Our margin is transparent, it's 15%, and it covers every cost that we have. Of course, the cost for the selection process that we do, so the 3-step I just explained, the administrative cost of ClimateSeed, and also the cost of communication. So we have a communication team. If you want to communicate on your impact and you want to link this communication with science, so climate contribution, again, of course, we can help. And this is included in the 15% as well. So we have a question for you now for every use case. Again, this is the first use case we launched with XXL for the marine industry. But we can replicate that to railway, to, of course, airlines and other industries where deviation happens. And what I like about this projects and this product is covering and having a strategy for excess emission. Again, I think this is very important because for those emissions which are unforeseeable, we need a strategy, but nothing can be done directly within the strategy, long-term strategy of the actually like company when it comes to like a long-term CSR strategy. So the question is, for your business, do you find this interesting? Do you have trucks? Do you have shipping into your value chain where excess emission could happen, and you want to have a strategy about those excess emissions because they are still going out into the atmosphere, and we need to do something about it? Right? I see that we have like 5 minutes left probably, so if you have any questions for Sundeep or me, please do not hesitate, or of course we can talk about the product and the company and everything you wish during the roundtables. No questions? Thank you.